If you're not paying very close attention to CEI, you might get trapped. Let's go ahead and go over this trickery here. What is up, you guys? Thank you so much for stopping by once again on this wonderful Saturday night. This is ARCa coming at you with a CEI, technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at CEI on the 12-hour chart here, and I have noticed that we're in a descending channel. Okay, so this descending channel thus far is using the golden rule of three, and it has since retraced from its third test. And if you remember correctly, if you're a regular listener, you'll know that that usually the third test presents the biggest shorting opportunity for short sellers or for short biased traders, right? So let's go ahead and continue this because there is an awful amount of trickery happening here, and I know that there is a stock split coming up, and I know that it's a 1-to-50 ratio of a reverse split. I think it's a QSIP, right? Please let me know in the comments down below what you know about the fundamental analysis on CEI. As you know, that I don't follow fundamentals. I only follow statistics and mathematical practices. But yeah, so that's beside the point. So please don't mind this downtrend here that appears to be a broadening descending wedge. We will get to that as we move along, and please don't focus in on just these things just yet. I guess we can actually just look at some. This is me actually just looking to see if it's trading in a geometrical format. So in this case, we actually are. You know, the top of this candle that was printed on Friday, just this Friday on December 16th, had a top side of, let's see, what was the closure of that candle, or the high side of the candle was actually 11 cents, and that 11 cents actually has very much confluence between the 3-spot 618 and the 4-spot 236, which are located at 1034 and 1113 to be precise. Okay, so this is using a geometrical form. So this is the pre-market fib that I took from Friday, and now if we're looking at Thursday, the daily fib. So it's a larger term time frame, and the day prior, you can actually see that the top side of the candle, the last candle that we printed on Friday, that 11-cent candle actually has confluence between the 2-spot 618 and the 2-spot 272, which are located between 1068 and 1136, perfectly in line. Okay, so we are noticing that the trade is using geometrical forms in a sense. Okay, so let's go ahead and move on to the next chart. All right, so this is a macro perspective, as we need to know what's happening historically to gauge the price direction for our future, or an implied projection, or yeah, just, you know what I mean. Okay, so yeah, we're looking at the monthly chart here. Okay, so on the monthly chart, I have caught a falling wedge, and usually falling wedges present an upside continuation. Okay, so they do have a bullish outlook in this case. So what I am noticing here is that, first of all, we have to see where we were in order for us to understand where we're sitting. Okay, so this this pattern that you're noticing here, that I'm actually going to start just changing the lines just a little bit, and changing the color's fine. Actually, we'll leave it in that color. We'll just make solid lines. So this is what's called a right-angled broadening ascending wedge. So usually right-angled broadening ascending wedges do have a bearish outlook, and the price objective is usually found when the breakout actually happens to the price. So in this case, the breakout happened on June 1st. 2022 on this monthly candle here. So we can actually take a trend line from the top of the wedge, leading all the way down to the bottom side of that wedge, and we apply it to the breakout point. Don't worry where you apply it. It is a perfectly horizontal line, so we can actually just apply it at any point, and we can gauge an understanding. So there are two possibilities here. I understand that I just did say that it is a horizontal perfect line here, but however, the falling wedge is not a perfect horizontal line. It does have about a 60% decline. Okay, so if we were to apply it into say for example, from this spinning top doji that was printed on this monthly candle here, the price objective actually has a little more to do with the support bottom of the wedge. Okay, so in this case, the spinning top doji was July 1st, 22nd, just so that we're all in line. But nonetheless, it looks like the price objective for that broadening wedge is actually, if you can take a look all the way to the right of your screen, where that gray, where my cursor is, you can actually see that the take profit for the short sellers should be at about 3 cents, or just close to 4 cents. So that's 0.0387 to be precise. Okay, so we're looking at a potential potential minus 92%, 92.11% decline. Okay, so we now have a projected target per the playbook of how to trade right-angled broadening ascending wedge. Okay, it is particular to the downside. All right, so now, if we're taking a look at that target of about 387 that we're looking at, we can actually see that there is some confluence to the bottom side of the support of the falling wedge, which now would lead us to believe that we're getting closer to a support bottom and a potential upside continuation. Okay, however, in the price action that we're looking at in the candle format, particular to the monthly chart, it does look bearish. It does look like we can continue to the downside. Now, another thing to know is that usually these falling wedges or triangles in general tend to break out when we're about 70% to the apex. So we're arguably about 65% of the way. So there could be, it could be, you know, it doesn't mean that it can't break out here. What I'm trying to say is that they usually tend to break out around 70-75%. Okay, but if you can take a look, it's a little hard to see to the right of your screen right over here. But in the closure of this monthly candle that we're currently on, closes in 12 days, 16 hours. So literally anything can happen within that time frame. So that'll be forever. So now, in order for us to see an upside target based on the breakout, or a potential breakout from this falling wedge, would actually be like this. So we actually take a trend line from the top of the triangle to the implied bottom side of the triangle, which could actually be right over. We can actually extend the line just a little bit, and we'll make sure to imply that actual target, right? So here it is. So we can see that we have. Okay, perfect. Now we apply it to the supposed area of breakout. So, I mean, we're so close to that stock split. So, and this could be a similar situation to the COSM ticker. So let's just go ahead and just imply that we would break out on this month, right? So it's leading us to a target of about $87.82. So please remember, it's just the playbook rules. This is just how you trade the falling wedge, just like how you trade the broadening wedge. Right back over here, similar ways. Okay, so yes, our implied or projected target is 80. Let me just clear that out of the way. And take a look at here. So 86 spot 52.92. So that's what it's looking like for our top side target. Okay, so let's go ahead and move on to the next chart, as this is going to be the statistical side of the analysis. Please pay very close attention, because this is very important. Okay, this is a back test that I ran particular to momentum versus volatility profile, and I have ran a back test particular to the 12-hour chart on the CEI asset throughout the entire trading history. Okay, so these are actually all my notes, and that backtest actually consists of any time that, actually, first, for the new viewers, new listeners, this is volatility you're looking at, represented by this indicator BBWP. So volatility is direction neutral. We pair it with a momentum-based indicator so that we can gauge that bias for direction. In this case, we're using stochastic momentum, which is actually proprietary to TradingView software, which, by the way, the link is located down below, the affiliate link. So that actually helps me out when you do sign up for an account with TradingView. Okay, so as we can see here, the 12-hour chart stochastic momentum is still suggesting a continuation to the upside. I have backtested stochastic momentum in particular alone throughout many tickers, and I've actually gotten a read of about 75 to 91% accuracy in guessing the asset's direction. So not bad. Not perfect, but very good to consider and to factor into our probabilities, right? Okay, so now let's go ahead and continue. As any time that we have entered into the critical volatility zone, which could be considered to be above the 90 percentile where my cursor is currently laying on this yellow trend line. So anytime that it has reached critical volatility at 90%, or it has actually entered the 90 percentile, I have taken note of that iteration's upside thrust. Let me just go ahead and zoom into the price action here so you can see what I mean. Okay, so we'll go ahead and open up a correct iteration so that you can understand exactly what I'm talking about. Okay, so I have taken note of that iteration's upside thrust based on the firing of the signal, the duration of that iteration, and however many times volatility versus momentum profile have actually guessed the downside, the upside incorrectly versus correctly. So that gives us a set of numbers, and the statistics, please remember, that are not certainties. They're just statistical values for us to evaluate. Okay, so in this case, we have a total of 44 iterations throughout the entire trading history of CEI and the 12-hour chart, of which 29 were guessed correctly to the upside, giving us an averaged upside accuracy of 65.91% with an averaged upside thrust of 73.19%. Okay, so in this case, the probabilities are looking not bad. In this case, if we were to apply, because the signal is already fired, okay, and if we were to apply that upside move based on the price action to when it actually fired off, we'll get an implied projected target again. Okay, so we're gonna go ahead and we're connecting all the puzzle pieces. Okay, so we're literally making our next opening move, or I'm sorry, we're connecting all the pieces. You'll see what I mean. Okay, so in this case, from the firing of the signal, which could have been right, let's see, at the peak right over here when we actually entered critical volatility, and now we have started a contraction phase to the downside. So that would be implied on right over here. Okay, so it could be at the top side of this, at the top side of, actually, it would be a little lower, just a slightly bit lower. Just a moment. Okay, we have to make sure that we are as precise as we can be. All right, so yeah, so we're looking at a potential topside target of about 1213 for the statistical value, and this is a 12-hour chart, so this is likely to take. I'm actually still in the process of completing the backtest. It's just this is a very tricky ticker, so the average duration I still have to acquire, but I would imagine that this, since it's on the 12-hour chart, that this would be no more than anywhere between 8 to 15 days total on average. Okay, so let's go ahead. So now that we know that this statistical value of about 12 cents, let's go ahead and move on to that last chart. So in this case, we are looking at the divergence chart. So divergence is usually the opposition of price action versus momentum. In this case, momentum represented by RSI, Relative Strength Index. Okay, so for the new viewers and new listeners, the purple line that you're looking at here is of the RSI signal itself, and the pink line is the 14-day moving average, which is standard to any RSI setup. Okay, so the drives that you are currently looking at here, making a series of lower lows on price action, and I mean, let me go ahead and just zoom in like a lot so that you can see exactly what that divergence is playing. And the divergence making the drive of higher lows, that creates, we just have to take a look over here, and that creates a bullish regular divergence. Okay, so this is one drive of regular bullish divergence, and it is in play thus far. So now let's look at the targets one more time, because take a look at this. If we're looking at a multi-pane here, we can see that there is a slight pullback on the buy hourly, right? Let's look at the 30-minute. 30-minute is also suggesting a slight pullback. Now, there is an upside continuation on the 6-hour, so that's good. I definitely see that as good. But focus in on the daily. The daily RSI is still suggesting downside, and we are well within the oversold percentile and also below the moving average, and we're using the moving average as a form of resistance and a continuation to the downside. Mind you, the downside pivot on the RSI signal is aggressive. Let's look at the daily. Let's look at the buy daily. Buy daily is also aggressively suggesting downside. The 3-day is also suggesting aggressive downside. and the 5-day is also suggesting downside. Okay, so what I'm looking at here is a potential retest of the resistance of this channel. Okay, so we can potentially look at the channel test resistance at the very top again, which could be at about 1093 before capitulating. And this the upside can be looked at on the next session or the following session, but since the indicators are actually giving us a potential downside continuation for days ahead, and we're on the test number 3 here, we can actually see a rejection for sure between the 3.618 and 4.236 between 1034 and 1113 before rejection and coming right back down to test the lower end of the channel itself. Now, the lower end of the channel itself is not confluent with any targets other than the pre-market December 16th pre-market fib right at the 0.786, and I'm sorry, at the 0.618. That's very confluent. That's good. It could likely be a short-term stop before a little bit of a bounce and continuation onto the downside. And why am I saying downside further than that channel? Is because of what we're looking at here on the right-angled broadening ascending wedge. It does have a suggestion to 387 or 380, whatever we were looking at just a little bit ago. So yeah, about 3 cents, 387. Also, the descending or the falling wedge also has a continuation to the downside. Okay, so now because this is giving us a lower target, we can now assume that we are not trading a descending channel. We are now in the understanding that we actually may be within a broadening descending wedge. Okay, so this is what I mean by the trickery. And if you're still listening to this, congratulations, you're probably going to succeed in this trade. Okay, so for the people who stopped the video a little too early, well, there you go. Okay, so now I know that the stock split is coming on about, let's see, December 21st, it appears. TradingView allows us to see the financials and stuff for the company specific fundamentals and stuff. So the 387 level that you're looking at here is absolutely in confluence with the bottom side of our broadening descending wedge. So in this case, it actually would be suggesting a bottom side by about December 29th. Okay, so now I know the stock split is on the 21st, where we don't know what's going to happen within that. But just like in COSM, it's the potential of us just making that stock split and it just goes straight to $6 or whatever, because it'll probably be the conversion around there. Don't quote me on that. And then it'll immediately reject all the way to the downside and all this fear, potentially test our bottom side of this broadening descending wedge, and then continue on a massive rip to the upside, since there could be short positions that would be panicking and closing. Okay, so this is so far what I'm looking at. I'm still performing a back test. I know this video is long, I apologize, but this is very important for us to listen to. Okay, so please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, I need you to do your own DD and we'll be just fine. Please don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave those links in the description below for you to consider joining the Discord community. It's called ARCa. All right, so but with that said, I wish you well. I wish you a very good night, and I will catch you at the bell on Monday. Adios.